This is Retirement Success with Steve and Elizabeth Holland and me, Todd M.J. Schmidt. For over 30 years, Steve and Elizabeth have been protecting your wealth or helping you create the retirement income that you need by creating inflation-adjusted, tax-advantaged, customized plans, because your retirement may be 20 to 30 years of unemployment. The Holland Group Retirement Wealth Advisors has the experience to take you to and through retirement. So let's make the rest of your life the best of your life. Welcome back, everybody. Welcome into Retirement Success, another edition with me, MJ, Todd Schmidt, and of course, Steve and Elizabeth Holland from the Holland Group Retirement Wealth Advisors. And today's show is going to be just a little bit different because we're going to pull back the curtain on Steve and Elizabeth's brand new book. It's called Greed and Fear, Conquer Both for Retirement Success. And honestly, if you ever watch the stock market like it was a roller coaster at Busch Gardens while clutching your chest and yelling, "What's happening here? What's going on?" Well, this show is for you.
Right. Yes, I can just picture somebody. What's happening here, Elizabeth? What's going on? So, as you know, I'm not a real big roller coaster guy. I mean, I used to be, right? I used to like roller coasters. It was a lot of fun when we were a little bit younger and prior to my shoulder surgery, but not so much anymore. And I'm not the type of guy who gets on the highway and speeds, right? Wouldn't you say, Elizabeth, you've been driving with me for 42 years. Wouldn't you say I'm a pretty safe driver? Now, occasionally I do spurt. MJ, look at her. She's looking at me like,
what?
So, Steve, do you have the safe driver notification on your driver license?
I do not. No.
I'm sure it does. I'm sure it says safe driver.
I think I asked to have it removed.
Take it off.
No, I jokingly say I don't speed. I occasionally spurt, and spurt is when you go maybe 5 to 7, 10 miles per hour over the limit every
13.
now and then for a very short period of time.
Right.
That is spurting. But anyhow, this book came from more than 30 years of sitting across the table from retirees, pre-retirees, that were, sadly, they were making emotional decisions with their life savings, and we couldn't let them continue to do that. We can't allow our clients to gamble and speculate with their life savings. Makes no sense at all.
No, it makes no sense at all. But, it's really good to have this book because it really gets into the emotion. And we have seen two emotions that really drives almost every major financial mistake: greed and fear. And how this works is that too much greed can really wreck your retirement. Well, then on the other hand, too much fear, really being scared of the market, really being scared to invest, whether it's the market or not. Having your money safely tucked away home, safely put in the safe in a bank, safely have a savings account or a CD that's not paying very much. These are the things that we see that quietly destroy your retirement as well. So greed and fear is something that you and I talked about, and we discussed it with Alicia and Rachel, and we said, hey, you know what? Let's come up with a book that is really going to resonate with people, that they're going to understand the too strong emotion that actually destroys their financial empire, if you would.
Yeah, and, I think it's best described when we talk about two clients. So one client that you'll meet, a new client who says, you know what, I'm behind the 8 ball. I haven't really planned for retirement, so I'm going to get real aggressive in the next 3 to 5 years because I've only saved $100,000. And we say, no, you don't want to get really aggressive in your last couple of years working because what if there is a crash, a correction, a major sell-off? And then the opposite is the fact that since the pandemic, and, the pandemic, it was already 6 years ago. So 6 years ago, we saw so many people leaving $500,000, $1 million, or even more sitting in cash. They didn't even care how much they were making. And they went to some of these, what I call fat and happy Wall Street banks that pay next to nothing. and it's terrible. So the goal of the book isn't to scare people. It's to help them understand how to build sustainable retirement income for the rest of their life, avoid emotional investing, and stop treating retirement planning like a casino trip to Las Vegas.
It's all about education. It's educating your clients, educating our listeners. And today we'll be reviewing the biggest concepts in the book. We'll go chapter by chapter in plain English. Plus, Steve and Elizabeth are going to share stories and lessons and some truths that Wall Street probably hopes that you never hear, but you'll hear it here on this radio show, Retirement Success. If you have any questions along the way, if little points of interest pop up, please call the Hollands. Have a conversation about your retirement, your investment strategy. See, the show, the advisory, the book that the Hollands just put out, it's all about educating you and to inform you. And if you have any questions, please call the Hollands. They would love to talk about your specific personal situation with your investment strategy and your full retirement planning, including the crucial element of tax planning. All you have to do is call the Hollands at 727-228-6449. That's 727-228-6449 for the Holland Group Retirement Wealth Advisors. So that's the phone number. Always great to call and talk to somebody on the phone. But if you'd like, you can also just hit the web. You can go to their website, askthehollands.com. That's askthehollands.com. And at the very top of the page, you'll see click here for a discovery call. And then you pick the time and date that's good for you. And boom, you'll be with the Hollands to have a one-on-one conversation about your portfolio. Simple as that. Easy stuff. Let's move on to segment 1 regarding the book. And that's going to be why greed and fear. Now, these are two emotions that do control Wall Street.
Yeah, I think we came up with this idea because it's your greatest ally and your biggest enemy, right? At the same time, some people have way too much greed and it's going to hurt them. Some people have, like we mentioned, way too much fear and it's really going to hurt them because their money isn't growing as fast as inflation. So, greed tells people save a little bit more, save a little bit more, put more in the market. You can do this. And fear tells people hide all your money under the mattress, keep all your money in a
coffee
can,
right.
Or a checking or savings
Or put it
account.
in the refrigerator, put it in an oven, put it in a microwave, hide it. Some people don't like using microwave. Guess what they use it for? And this is a true story. I'm not just
hiding money.
Yeah, hiding money in a microwave because they feel like, hey, I don't want all that electrical stuff and all those things happening. So I'm going to put it in a microwave, and no one is ever going to check the microwave. That is really absurd. But things like that do happen. We do see it. One of the things that these two are too extreme, right? So the greed and fear, and we wanted to really capture that moment on greed and fear when we wrote this book. This isn't a book that was ghost written. Right, I must say that this is you and I taking our time and really dissecting what we have learned from our clients in the past 30 plus years.
That's right, and it's definitely not ghost written because it took us a couple years to really, set aside the time to go over it and talk about different stories and strategies that we've implemented.
Right. So we have met people in the 60s and the 70s, who are still having that greed. I want to be aggressive. I mean, you just said it, right? I want to be aggressive. I want to have about, 90% of my money in the market because I'm behind the 8 ball.
Right.
And this is something that we have seen, and we know they're just chasing the returns on the market. They're not really planning effectively to get the kind of results we're hoping to have for them. This is why people come in and see us, because these two emotions can really destroy your plans for retirement if you don't have someone really watching over you, helping you, constructing, building a plan for you.
Right. And then on the other side, as we mentioned, people in CDs or savings accounts earning 1%. maybe 1.5 or 2% for 20 years. And, the other thing that we want to throw in real quick is when you invest in, say, a bank CD, and we're talking about non-retirement accounts, when you invest in a bank CD, checking savings account, and you get a 1099 at the end of the year, the IRS is saying, we don't care what you do with the money. If you're growing the money and you're not touching it, you still have to report it.
Yes.
So it's taxable as well, which of course is really bad. So the bottom line with this scenario, we call this going broke safely. And I heard another radio show over the weekend, somebody using this term. All right, just want to tell you, please send us a royalty check because we were the first to mention the term going broke safely on the radio, and it was over 20 years ago.
So, I know, Steve, but, they say, when someone copies you, it's a compliment.
Flattery is the
something
best
to that,
form
yeah. So, it's imitation is the most sincere form of flattery, I guess.
Right.
Is the,
I see.
Yeah.
Right.
But you know what? It's just pretty much if we do listen to other people's radio show, and it's like obviously listen to ours because they use so much of the verbiage that we use. This phrase usually gets people attention, right? So let's wait and see what they're going to talk about on the radio, other advisors, if they mention greed and fear. This will be interesting
Right.
because we have heard just about everything that we have used and talked about on the radio, other people are using. So greed and fear is really something that we feel that would have it got my attention, it got your attention, because people want to know what's it all about. So that phrase usually gets people's attention. Every 24 years, inflation doubles your cost of living.
Yeah, it certainly does. And that's really scary if you stop and think about it because nobody plans for inflation that way. One of the stories that we talk about quite a bit in the book is what happened during the dot-com crash. Now, we call it the dot-com, dot-bomb crash. Many investors, Elizabeth, you remember this, they lost like 75% of their portfolio. And you know what was crazy? Back in the late 90s, people were saying Warren Buffett, yeah, the old guy's finally lost it.
Yeah,
he's
I remember
out
that.
of touch. He doesn't know what he's doing anymore. And then the market crashed, and he said, of course it did. Of course it did. All these companies were, many of these companies were developed in a garage in Silicon Valley like 3 to 5 years earlier. There's no fundamentals behind these companies. There was no true trading. People were just gambling and speculating, and that's why we had such a big crash.
I was trying to think of some of the dot-com casualties like WorldCom. Remember WorldCom?
Right. Yep.
Big
absolutely.
loser. You had Webvan. Remember, was it Pets.com?
Yep.
Remember, was highly inflated. These are some of the huge losers. And listen, even Cisco, and of course Cisco is still around.
Cisco and Micron Technology as well.
Oh, Lucent, that was another one. Remember?
I remember that.
Oh, EMC. Remember EMC?
Right.
Digital data storage. So, you had some Qualcomm. They had, a massive loss. So, some of these companies are not around any longer. Yep. Some of them are. But, the dot-com bubble, that was a huge deal.
It definitely was. Yeah.
So, folks, if you are near retirement, there isn't always enough time to recover. And I think, Steve, as we were just referring to some of these big name stocks, if people were heavily invested and they lost 75% in some of those big tech names, then these people did not have the time to recover if they were near retirement, at retirement. This was troublesome for many individuals. And I remember the angst that people were going through, Elizabeth.
Yeah, you're absolutely right. So if you're 35, you have about 30 years to recover from any major downturn. But, Steve, if you're 67 and nearly retire, well, then the math changes dramatically.
Well, why are you addressing me on that? I am not 67.
I couldn't say MJ because he's not there either.
Right. I am a much younger man than 67.
And MJ's a younger man, much younger man than you are.
And
so
he's much younger. Right?
Yes.
Honestly, though, the phrase that we use all the time here is the phrase, hey, I'm not 45 anymore, because even if you look at 45 to 65, you're talking 20 plus years. And that's a long, long time to hope and pray that you're going to make money back and you're going to be okay.
The Hollands have been around for a long time. They've seen a lot. You have a lot of, newbies, newcomers in this business of financial management and portfolio management and building retirement and investment strategies. But the Hollands, they've been through the thick and the thin. The Hollands have been around since 1993 in this current form. Now, they had prior involvement in the industry, but they formed the Holland Group, their very own company, in 1993. That's over 33 years ago. So they have been through the dot-com bubble. They've been through some of these black swan events like 9/11, the financial crash in 07, 08 into 09. They've seen the ups and the downs. They know what people go through. They know how to build portfolios and investment strategies for people just like you. And this is why we recommend that you call the Hollands to have a conversation. What is your risk? That's one of the things the Hollands always look at, is they calculate, and they have numerous programs to look at your risk and your risk tolerance, and looking at your stake in equities or stocks to see if you have too much exposure. One of the things that's always pointed out is that some people go to the Hollands for an analysis and they find out that people are holding the same stock 5 times, 10 in different funds. And that's what the Hollands will sort out for you. 727-228-6449 is how to get a hold of Steve and Elizabeth Holland. Just call the office. Ask any questions. Meet with the Hollands. Say, hey, can we meet? Can you look over my current portfolio and my investment planning and tell me what you think? What would you do differently? Can you fix it? Is it a mess? Is it a basket case? Listen, it ranges from total dumpster fire to, you know what? You're on a pretty decent track, and maybe a couple of tweaks here and there. Call the Hollands. Get that second opinion from Steve Holland, known as the second opinion guy for years. 727-228-6449, or go to the website, askthehollands.com. That's askthehollands.com. And at the very top of the page, click on Discovery Call and book a time. You pick the time and date, and boom, you'll be talking with the Hollands. It's really that easy. Moving on to emotional investing. That can be very, very expensive, right, guys?
Yeah, very expensive, and you will get very, very emotional if you lose half of your wealth. Here's a blast from the past. I used to quote this company all the time. Their name is Delbar. Now, Delbar, every single year they do a quantitative analysis of investor behavior. They call it the QAIB. This is a report that highlights what the average equity fund investor is doing compared to the market itself. Because the market doesn't buy and sell, Elizabeth. The market is just the market, right? But investors buy and sell all the time. And investors are encouraged by mutual fund companies that it's okay to buy and sell and buy and sell and buy and sell. And we know that's not how you truly make money. But they're saying in the past 10 years, the average investor has made about 9.8% per year, while the S&P return has been above 13. Now, that doesn't sound like a big difference. Well, 10% compared to 13%. But take that year after year after year. Take that for 10 years, 15 years, 20 years, and it makes a very, very big difference. So do not be an emotional investor. Stay away from making these really trigger finger investment decisions, getting out of the market, getting back in.
Right.
It doesn't work. It's time in the market, not trying to time the market itself.
Retirement is about income, not just net worth. Now, one thing that I noticed in the book, guys, is this idea that retirement is not about the size of your account. It's all about income you bring in.
Yeah, absolutely, MJ. You know, we say it all the time in the book, and we say it all the time here in the office. Retirement is not about net worth. Retirement is about monthly stable income that's inflation adjusted and, of course, absolutely sustainable.
So let's say you have $1 million. That sounds really wonderful, right? Until someone starts taking withdrawals from it. And what about if they were taking that withdrawal from a down market while inflation and taxes are rising? You know, that's not going to be a good mixture. That $1 million is going to really dwindle.
Yeah, and dwindle very, very quickly. This is where we talk about sequence of return risk. This becomes very critical. A retiree experiencing negative market returns in the first 5 years of retirement can dramatically impact how long money will last. A classic time period is the year 2000 through 2002. That was only a couple years. That was 3 years, but it chopped a lot of portfolios below 50% of their value.
So that's why we really focus on income planning segments, because we know what happens when people do decide to retire. They have to have a plan. Guaranteed income, flexible income, growth-oriented income, all coordinate together. And this is what we do for our clients and new people who join the firm. We do this retirement planning, income planning. This is so crucial to part of their portfolio.
Steve, true or false, this isn't just buy investments and hope.
Yeah, that's for sure.
Yeah, really.
No, you don't want to do that. Hope is not a retirement strategy.
Retirement lifestyle planning is also crucial, Elizabeth.
It is. So many people, spend more the first 10 years of retirement than they would expect, because they finally have freedom. They can travel, grandkids, they have, hobbies, healthcare surprises, but the grandkids, I have to say, is the one that really make them spend a lot of money.
Yeah, that's right.
What we do is whatever the grandkids want, we do. But travel is a big deal for a lot of people, and they do spend a lot of money because now, as I mentioned, they have the freedom to do so.
It's a good thing we don't have to travel to see our grandkids.
We go across the street.
They're right across the street, right? So it works out pretty darn good for us. But here's a problem that we've been reporting for well over 20 years on the radio, and that is simply this. Fidelity now estimates that a 65-year-old retired couple may need roughly an extra, notice how he said extra, an extra $330,000 for health care expenses throughout retirement. Elizabeth, do you know of any retirees who come in and say, hey, I got an extra $300,000 set aside just to cover health care?
With that number, somebody might have just rear-ended somebody on US 19 or 275 or be careful. I remember that number. I've been doing these radio shows and hosting these shows for so long. I remember when that number used to be like 150,000.
Yes,
that's right.
And now it's at 330,000.
Yes, it is.
Yeah.
That is absolute insanity. Folks, the Hollands are here to help. This radio show is to educate you. The Hollands have this new book out. We'll give you more details on the book in just a bit. And we're going really kind of chapter by chapter and bringing you just a little touch of what's in each chapter in this book. And it applies to so many people with their investment and their retirement strategies. If you have any questions, if you'd like the Hollands to take a look at your investing strategy and your full retirement planning, including tax strategy, which is crucial, please call the Hollands. Any questions? 727-228-6449. That's 727-228-6449. Or go to the website, askthehollands.com, click on Discovery Call, and then you pick the time and date when a call is convenient for you to have an initial chat with Steve and Elizabeth Holland and the whole team here at the Holland Group Retirement Wealth Advisors. When we get back, second half hour on deck, the hidden dangers of fees and complexity is next.
Hey, Sean Hannity here. Unless you want to pay more in taxes than you have to, you should pay attention to what I'm about to tell you. As you know, President Trump's tax cuts have been extended thanks to the One Big Beautiful Bill. What you may not know is that right now, right this second, is the time to start taking advantage and locking in lower tax rates. Do you know who can help you get it done? Steve and Elizabeth Holland and their team at the Holland Group Retirement Wealth Advisors. Now, all you need to do is call 727-228-4673. That's 727-228-4673. Now, you don't want your hard-earned money going to Uncle Sam to be wasted. It's your money. Keep more of it. Steve, Elizabeth, and the team at the Holland Group can show you how. 727-228-4673. Don't wait. Find out how you could be saving in taxes for retirement with the help of Stephen and Elizabeth Holland and their team at the Holland Group Retirement Wealth Advisors. 727-228-4673.
Welcome back to Retirement Success from the Holland Group Retirement Wealth Advisors. Hey, it's MJ here, Todd Schmidt, along with Steve and Elizabeth Holland. If you're just joining us, we're going sort of chapter by chapter over the brand new book from Steve and Elizabeth Holland, which is incoming. It'll be here very, very shortly. The book is called Greed and Fear, Conquer Both for Retirement Success. And fairly soon here, you'll be able to get a copy from the Hollands, and we'll let you know exactly when you can get your copy from Steve and Elizabeth Holland, and it is going to be very, very important reading. The second half hour starts with the hidden dangers of fees and complexity. Listen, bottom line is hidden fees absolutely add up and can clobber people.
You know, I got to tell you, you guys, you know I'm very passionate about this subject. I always have been, because there's still a huge part of the industry that abuses the average investor because they know nothing about hidden fees. They don't know the difference between implicit fees and explicit fees. And, the section on the book about hidden fees is so important. We've seen investors they're told by their advisor, oh, we're only charging 1.5% or 2%. But when we dig deeper and we look at their fees, a lot of these advisors are only disclosing their fee.
Yes.
But they also have a mutual fund fee or a, say, an ETF fee or structured notes. There's fees inside those as well. There's turnover fees. There's ticket charges. There's revenue sharing fees.
How about the airport concession fee? Is that on there?
Yeah,
it should be.
Yeah,
you ever see that on the rental cars? You ever see all the fees that are on the rental cars at the airport?
Yeah, it's unbelievable. It's unbelievable. And, people just don't want to read all this stuff, and they don't take a look at it. So it's still a very big problem.
Yeah, when I hear all these fees, I just think of those rental contracts when you look at all the fees that are up there.
Initial here.
Yeah,
initial
it's the
here.
Thursday fee. Oh, it's the Saturday fee. It's
Right.
It's there are 3 clouds in the sky fee. I mean, there's all kinds of, crazy fees.
Yep.
One of the things that I must mention is that people get so hung up on fees because the advisors that they're working with is not transparent.
No, they're not.
So this is where
they act like they are, but
Yes.
they're not at all.
Right, and you mentioned structure notes. Yes, there is a lot of hidden fees there and the high fees as well. So for us, this is what we do. If you want to know what our fees are, it's very simple. Go to our website and check out our ADV.
That's right.
You'll see the exact fees. Now, if you're concerned about other people, other advisors on this radio station, check out what their ADV looks like. We have done that, and it's amazing.
But you know what? Our ADV is still it's not a complete picture of what a lot of our clients pay. I mean, it's never more than what's on the ADV. Many times, it's a lot less. Yes, I encourage people to
check it out.
Do the same thing. Check it out. Yeah.
So let's say over 20 years, even an additional 1% annual fee can reduce your portfolio by hundreds of thousands of dollars. That's all depending on the account size and the growth.
That's right. Yeah, Wall Street sometimes will, they'll bury the complexity, and they'll bury it, the complexity, the jargon. They're going to bury it in something called a prospectus. And a prospectus is a booklet that you receive prior to investing, and the SEC says that you should read this cover to cover prior to investing. Nobody does. So there's a prospectus. There's a statement of additional information. Arthur Levitt, who wrote a a great book. I've talked about it many times on the radio show. A great book about investing. He says in this book, sadly, the average investor will fail because they have no clue that many big brokerage firms and mutual fund companies have all the rules tilted in their favor. And it's not fair at all, but hidden fees is still a very big problem.
We're talking about expense ratios, mortality charges. There are management overlays, riders, wrap fees. I mean, the list goes on and on. And with these terms and conditions, nobody reads this stuff before they click the big red accept button. Right?
Yeah, it's sad, but
yeah, it's
so true.
So exactly, accept button effective your retirement, which will affect your retirement. People don't. It's like doing your updates. Right? Your computer updates or your phone updates.
Yep. I'm going to share with all of our listeners something that now Elizabeth got this as a gift. It's kind of like the gift you would get from Spencer Gifts. Remember that
in the mall.
Right. A crazy store. So she has this little button on her desk that she can press. Now, this is radio, so I can't really tell you what it is, but it's that word that starts with bull, B-U-L-L, and then there's another word that rhymes with shift.
Or my real last name.
Right. But it's pretty funny because you press that button and it says, I call that bull, you know what.
Yeah.
But yeah, that's what we're looking at in the industry. It's such a joke. And you know what really kills me is advisors out there who say, we don't like this, we don't like that, and they don't like certain investments like annuities because they can't charge a fee. The SEC says, no, you're not going to charge a fee on a fixed annuity. So they can't charge a fee, so suddenly it's a very unpopular investment. And to actually tell people that all of them are terrible, all of the annuities are terrible out there, that is such a problem. You're polluting the airwaves. It's terrible because there's a lot of conservative investors out there, Elizabeth, who want to have some of their money guaranteed and some of their income guaranteed for life.
You know, this, again, is one of the areas that when you call the Hollands, when you schedule a phone call, when you meet with the Hollands, this is an area that the Hollands drill into. The fees, how many layers of fees? You might think you're paying, 1%, and a lot of times you're paying a lot more. What is the worst case, Steve and Elizabeth? The worst case, once you added up all the fees that someone that came to speak with you and for you to analyze what they're currently doing, what is the worst fee structure when you add it all together? What percentage were they getting hammered with?
Wow,
4%,
yeah,
4.5%.
Yeah, it's high.
A lot of those were the twisted, evil variable annuity decade that we went through,
and all these riders,
1990 to the year 2000, or even longer. But their fees were very, very high.
They'll break it all down. They know how to dig in and go beyond the surface and scratch all the way in. A lot of stuff is hidden deeply. The Hollands will figure this out, and they'll show you what your real fee structure really is. 727-228-6449. Call up, have a conversation. Again, this is complimentary. No obligation, no cost to you whatsoever. Find out what your fees really are. Let the Hollands build you their idea of an investment strategy, an investment portfolio, and the full retirement planning. Also, delving into the importance of tax planning. Any financial advisor or broker that you're working with, if they don't fully integrate tax planning into your investing and your retirement planning, you are missing a major chunk. That's like missing a major portion of your brain. That's something you don't want. So don't let anyone tell you, oh, we don't do taxes. No, taxes are very important to factor in, and the Hollands do. Please call the Hollands. Make sure you're on track. Make sure you're not getting hosed. I'm just being honest here. 727-228-6449. That's 727-228-6449 for the Holland Group Retirement Wealth Advisors. Also go to the website, askthehollands.com. You could book an appointment right on the website, very top of the page. You'll see click here for a discovery call. It's right below the Holland Group Retirement Wealth Advisors logo, and you get to pick the time and the date that's convenient for you. That's at askthehollands.com, top of the page. Click right there where it says book a discovery call, and boom. Before you know it, you'll be speaking to the Hollands, and they'll be diving into all of this. You know, complexity is not sophistication, Steve. Would you agree with that?
Oh, absolutely. You know, sometimes clients believe that complicated means advanced, and it doesn't. Not at all. Some products are so complex that even investment professionals like ourselves will struggle to fully explain every moving part. I say the following, and we've lived by this, Elizabeth, and it has done, it's helped us an awful lot. The confused mind always says no. So we communicate in plain English, and we spend the time to explain things to clients in plain English so they understand exactly what we're doing.
You know what I love? I love the fact that when you sit with someone and I am talking to them, they mention to me, Steve speaks in layman terms. He
right.
speaks the language that I understand. Now, I'm not sure if that's their love language, Steve, or whatever you're saying to them, but whatever you're saying to them, they understand it and they comprehend the fact that they're having a problem, they have some complication in their portfolio, and you can resolve it.
Right.
So that's what I'm saying to myself, wow, that's incredible. Steve peels the onion every single layer. And that to me tells me that you're so detailed and you're totally transparent. And this is what all advisors should do. We were listening to some radio show just the other day, and the verbiage that was coming out of this person's mouth was all false. And it was just so fabricated. We were like shocked that they can actually go on the radio and say stuff like that.
Right.
It's amazing.
They probably don't have a compliance department
Probably,
that
I don't know.
listens to the show. But you're right, Elizabeth. You know, transparency builds confidence.
Yes.
And that is so important. It's like, imagine you go to pick up your car is being serviced, and you go to pick it up, and they explain to you in 15 minutes what's wrong and what happened. You know what really, how we translate. What we hear is blah, 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 blah.
The Charlie Brown teacher, right?
That's right.
And that will cost you
X amount of dollars, which we understand. Yeah, but you have to communicate in plain English if you want transparency to build confidence.
727-228-6449. Again, complimentary, no obligation. Have a conversation with the Hollands. Let them build you these plans. No cost to you. There is no commitment. Just have a conversation and see what the Hollands would suggest for you. They're going to build you a financial plan, an investment strategy, the retirement plan. And this, again, complimentary, no obligation. Just call and ask. Have a conversation. Questions that are burning through your mind, 727-228-6449. or askthehollands.com. That's askthehollands.com. Market volatility and sequence risk. So this is why losses hurt retirees more. And you guys get into this a lot in your new book.
Yeah, we really do. We talk about market timing. We talk about timing risk, all of that. And it's a problem because timing matters enormously. For example, let's say you lose 25%, but you're age 35. It's emotionally unpleasant. It's you feel lousy, like, oh my gosh, I lost 25%. But try losing 25% at age 62 when you were going to start taking income the next month. That is potentially devastating.
So people tend to forget about those withdrawals that you begin. And your portfolio losses, the ability to actually fully compound, when it's uninterrupted. When you have your money and you're taking withdrawals and you see that, okay, I can start taking money from my account. This is no problem. I've saved for it. But you know what? It has the ability to lose money in that portfolio.
Right. And people don't really know when they lose money how much they need to make back. So a portfolio needs a 33% gain if you just lost 25%. And a lot of people, Elizabeth, they don't understand that. They think, okay, if I lose 25%, I got to make 25% back
they do.
To get back to where I was. And that's not the case at all. So you have to be very much aware of whatever you lose, you got to make back much more in order to be right where you were.
Yeah, the reality is that the math here can be very brutal.
Right. So retirees really doesn't really have that luxury that's called time.
Emotional headlines drive a lot of mistakes. I know that you guys have seen this over and over again with over 33 years as a fiduciary firm here in the Tampa Bay area. You've seen people and emotions and, pull the plug. You got to get emotions really sometimes are bad.
Yeah, that's for sure. And the media knows this. They know how to get to the emotional investor. The media profits from panic. If there's a market crash, it gets more clicks than everything is fine today. The market was up.
Yeah,
that's just
not very good news, right?
Right. That's just how it works. There's a saying, MJ, you've probably heard this in media. If it bleeds,
it leads.
It leads, right? Yeah. Yeah. And I think that's very true.
Of course, MJ knows that saying. So the media really try to provoke people's emotion when it comes to bad news on the market. Your portfolio is going to be destroyed. This is what we hear from people, and then they press that panic button and call us. Hey, what do you guys think? What do you think I should do? Should I get out of the market? And we have to stop and pull the reins and said, when we built you your plan, we mentioned to you this is going to happen.
There will be days like this.
Yeah, there's going to be times like this that happen. We don't get those calls frequently or at all because our clients who, when we build a plan for them, they know there's going to be market downturn. They know that there's going to be that fluctuation in their investment portfolio. These are things that our clients is fully aware of when they receive their plan.
Bottom line, there are people that still think that the world is collapsing, that everything's caving in, every single week.
Yes, absolutely. Now, I hate to laugh, but there's two things that we have heard since we opened up the Holland Group. Number one is the world is falling apart. And number two, I don't know, Steve and Elizabeth, you want me to invest now? It's 1994, and the market's at an all-time high. It's 1998. The market's at an all-time high.
I love this one. Our president is going to bring this country to the ground, like every president we have had.
Right. Every single one. Yeah. Everyone is terrible. Everyone is no good. It's going to be a rough time. And, oh, by the way, the market's at an all-time high. And we look back at it. We look back at the 35 years and we say, yeah, it was. But guess what? There was a new all-time high that developed sometime shortly after that.
Hey, regardless of where you fall on the political spectrum and who you want for president, who you want in Congress, now politics are pretty rough these days, but guess what? We're all still here.
Yes.
All of these years later. Let's talk taxes, the retirement threat that most people ignore, because retirement taxes can surprise the heck out of you.
Many retirees think that taxes automatically decrease in retirement. And Steve, I had to mention your mom 100 times.
Right.
Sometimes they do. Sometimes they absolutely do not.
Yeah, you got this thing called RMD, required minimum distributions. You've got Social Security taxation. Oh, MJ, here's a funny one. So we had a client who came in about a week or two ago, and he was talking about past presidents. And he said, you know what? And it was Bill Clinton who started this Social Security taxation. It's terrible. Clinton messed things up. And I said to him, yeah, no, I'm sorry. It was Ronald Reagan. He's the one who actually started Social Security taxation. Now, Clinton is the one who increased it, but it started under Reagan. So, you always hear that. You always hear the past presidents. So, RMD, Social Security taxation, capital gains, widow penalties, if you like. So these are the matters, Elizabeth, that, of course, are so important.
Of course, so you mentioned, let's mention surviving spouse can move from married filing jointly to single tax bracket overnight.
That's right. Yeah, sadly. And most people don't even talk about, advisors don't even talk about losing $15,000, $16,000 per year in deductions, but we do.
Yes.
We always have, because it's so important that that you have a good strategy with your tax return.
And that is a painful financial reality that most people never think about. Moving on to health care, longevity, outliving your money, this is a big problem. Living longer changes everything.
Yeah, it certainly does. Longevity is one of the biggest retirement planning challenges today.
So if someone retires at age 62 and lives to age 92, that's a 30-year difference in retirement.
Yeah, that's for sure. So that means that inflation, healthcare, income sustainability, it becomes massive planning variables that we got to deal with every single year.
And healthcare inflation historically has often risen faster than normal inflation.
The next chapter in the Hollands' brand new book, Greed and Fear, Conquer Both for Retirement Success, is about estate planning and family legacy.
So estate planning is not only for billionaires.
Yeah, there's a lot of talk these days about billionaires and how you can't even make $1 billion. It's AOC said that, like, oh, you can't actually make $1 billion, which was very, very comical. But anyhow, every family should at minimum understand what the difference is between a will and a trust, how a power of attorney works, how your healthcare surrogate is going to work, and how you should always have beneficiary coordination.
So especially in Florida, where avoiding unnecessary probate complication can really save families enormous money here in the state of Florida and stress.
And as we wrap things up on this edition of Retirement Success, in the book, The Real Meaning of Retirement Success, it's all about confidence, freedom, and purpose. And after reading through all the themes in the Hollands' brand new book, one thing becomes very obvious to me, that retirement success is very emotional as well.
Absolutely, MJ. Retirement isn't just spreadsheets. It really is peace of mind. That's what you want.
It's being able to enjoy your grandchildren without panicking every time the market drops 800 points.
Yeah, that's for sure. It's knowing your spouse is protected if something happens to you.
What a fantastic conversation today. The book is called Greed and Fear, Conquer Both for Retirement Success. And honestly, I think a lot of our listeners heard themselves somewhere in today's show. The book is at the publishers. The book will be available very, very shortly. Keep listening to the show, and we'll tell you how you can get your complimentary copy of the Hollands' brand new book. Folks, get a hold of Steve and Elizabeth Holland at 727-228-6449. Any questions, any concerns? Get a second opinion. Let the Hollands delve into all the fees that you might be paying with another advisory. Who knows what's hidden? Let Steve and Elizabeth dig in like detectives and find out what the true story is. 727-228-6449. This is complimentary, no obligation, no cost to you. Call the Hollands, 727-228-6449, or the website is askthehollands.com. Time to answer some email with Steve, Elizabeth, and Alicia. If you'd like to ask a question, go to askthehollands.com.
Tampa Bay, Alicia Holland DiBernardi here with the Holland Group Retirement Wealth Advisors. And today we are answering your question of the day, and I have Mr. Steve Holland with me.
Hey, Tampa Bay. Okay, I'm ready, Alicia.
Okay.
You've got a question. Now, I forget the guy's name, but you said he's from Palm Harbor?
Yes.
Right? Okay, fantastic. Our old stomping grounds, right?
Yeah, we've got Mike from Palm Harbor. And Mike's question is, I'm 63 and planning to retire next year. How do I know if I actually have enough money to retire comfortably without running out later?
Yeah, that's the big worry for everybody. And it doesn't matter if you saved $100,000 for retirement or you saved like $5 million or more.
Yeah.
Everyone worries about running out of money in retirement. You can't blame them. But, you have to break it down. You have to look at, okay, do I have a retirement income plan? Or am I just going to look at my balance and work off of that and project that I'm going to live to 82, 85, 88, which is a bad idea. Nobody has a crystal ball that actually works. Nobody knows when they're going to go. You need a sustainable plan, and you need to have a good portion of your income. You really should have it guaranteed. Guaranteed lifetime income is a good thing. Is it more expensive? Yes, it is. It definitely is. But it's a way that you can receive income. And if you have a spouse and if you pass first, of course, you'll be rest assured that your spouse is going to be covered as well.
Yep. And I would say that's probably a way to sleep better at night, too, knowing that income coming in during retirement is guaranteed. Another thing I think about, Steve, is really starting now, before retiring, truly evaluate how much does your lifestyle cost.
That's
and
right.
come to terms, face that reality, because oftentimes people will just say, oh, I only need $5,000 a month. That covers everything. And then they retire and find out it's $8,500 that they need.
Right. It's like, uh-oh,
Whoops.
I'm in trouble now. So true. And people forget stuff. They forget stuff all the time. You know, it's one thing that I've noticed over the years that people always forget: HOA fees.
Oh, yeah, that's a good one.
Right? Oh, yeah, that's right. Yeah, I do have those fees. I forgot all about that. Well, it's only $1,400 a year, or it's only $1,200 a year. Yeah, but you forgot it. And it's an additional amount that goes on that pile of your expenses. So, yes, we don't call it just a budget. We call it really dissecting your lifestyle, everything that you spend money on, whether it's monthly or once a year. If it's once a year, divided by 12, so you get it in a monthly format. Yeah, we got to document all that stuff to really put a good plan together.
And not only the balances and expenses that we do know, but now we're going into the territory where we have to project future expenses, and that comes down under the umbrella of healthcare.
Right. Healthcare, inflation. You know, you also have to stress test your retirement plan. How much do I have in the market? Do I have too much? Many people do the following. They get a job when they're out of college or out of high school, and they get a 401k plan, and they, all of a sudden, 30 years later, 40 years later, they've worked for that same company, and they've been a aggressive investor, and it's suited out to be really successful for them. It's been great, but guess what? Now you're going to retire, and you can't have your life savings at risk. You need a more defensive type of strategy and a strategy to deliver that income.
Yep, perfectly said, Steve. Thank you so much for that question, Mike. And thank you, Tampa Bay. Keep those questions coming in.
Hi, it's Glenn Beck. Let's face it, these are uncertain times. We're bombarded with news of political chaos, economic instability, and a world that feels more unpredictable than ever. I talk to so many people who are wondering, what does all this mean for my retirement? Here's the truth. You can't afford to leave your financial future to chance. That's why you should talk to Steve and Elizabeth Holland and their team at the Holland Group, Retirement Wealth Advisors. I've known Steve and Elizabeth for many years. They are people you can trust. I trust them, and they understand the challenges we're facing and know how to help you protect what you've worked so hard to build. They help people just like you create a retirement plan that's built to weather the storm. No cookie-cutter solutions, just honest help from a team that truly cares about your future. Don't let the chaos rob you of your retirement. Call Steve and Elizabeth Holland and their team at the Holland Group Retirement Wealth Advisors now. 727-228-4674. That's 727-228-4674. Take control of your financial future today with the Holland Group.